Welcome to the Deep Dive. Today we're getting straight into NIO's latest numbers. We're looking at their Q2 results and what's next, their forward guidance. It's quite the story. Okay, let's unpack NIO's second quarter 2025 results, the ones ending June 30th. It's interesting. Some definite highlights mixed in. The big headline, maybe, is that they posted a loss that was actually narrower than analysts were predicting.
Exactly. The non-GAAP adjusted loss was RMB 1.85 per share, and the street was expecting more like RMB 2.25. So a decent beat there.
Right, and that naturally gave the shares a bit of a boost, didn't it? Like over 1% in pre-market trading.
Yep, that tends to happen when you manage expectations on the bottom line like that.
But for context, total revenues,
Yeah.
they did hit RMB 19 billion, roughly US $2.65 billion. Solid growth, 9% year over year, and a big jump, almost 58% from Q1.
A very big jump quarter over quarter, yeah. Shows momentum building back from earlier in the year.
True. But that revenue figure did come in just under what analysts had penciled in. The consensus was closer to RMB 19.8 billion.
Uh-huh.
So for you listening, you've got this revenue miss, but a smaller loss. What does that actually tell us about where NIO stands right now? How's the market reading these signals?
Well, it's fascinating, isn't it? It's all about the narrative these numbers spin. Sure, the revenue was a touch light compared to consensus, but that smaller loss, that points to something arguably more important for a company like NIO right now.
Which is?
Underlying operational improvements. They seem to be getting a better handle on costs, even while they're growing. For an EV maker investing heavily, showing you can control the burn rate, that's a big strategic plus. It hints at better efficiency somewhere in the chain.
Makes sense. And it connects to the delivery numbers too, I suppose.
Absolutely. Q2 deliveries were 72,056 vehicles. That's up over 25% from Q2 last year, and a massive 71% jump from Q1 this year.
Wow, okay.
So loads more cars going out the door. But if revenue still missed consensus slightly, well, it makes you think about the mix.
You mean like what cars they're selling?
Exactly. Or the pricing. Maybe they needed more aggressive pricing to hit those volume numbers, or perhaps the mix tilted towards slightly lower priced models in that quarter. It's that classic volume versus margin balancing act.
Right. Always a trade-off.
Yeah.
Now, beyond the quarter, we've got even fresher data, the monthly delivery numbers. And these show some, well, pretty incredible momentum building.
Yeah, the August numbers really stood out.
They really did. In August alone, NIO delivered 31,305 vehicles. That's not just good, that's a new record high for monthly deliveries for them.
A huge number.
Huge. And it's up, what, 55% compared to last August?
Yeah.
Massive year-over-year growth for the month.
And it pushes the year-to-date figures up nicely, too.
Yeah, year-to-date for 2025, they're at 166,472 vehicles delivered. That's up 30% compared to the same period last year. And total cumulative deliveries are now over 838,000. They're getting close to that million mark.
They really are. Steadily climbing.
What's also interesting is how those August deliveries break down by brand. You've got 10,525 from the main NIO brand.
The premium ones, yeah.
Then a really chunky 16,434 from the new ONVO brand, the family-focused one.
That's the L90 effect kicking in.
Clearly. And then 4,346 from the FIREFLY brand, the small high-end one. So ONVO is really pulling a lot of weight already. For you, our listener, seeing ONVO take the lead like that, does it tell us their multi-brand strategy is actually clicking into place effectively? Or is there a risk, maybe, of overshadowing the core NIO brand?
That's always the strategic question with multi-brand plays, isn't it? The risk of dilution.
Yeah.
But I think what we're seeing here suggests it's more about targeted expansion. They seem to be carving out distinct spaces.
So NIO for premium tech, ONVO for families.
Right. And FIREFLY for that niche, high-end, small car market, it lets them cover more ground. And that August surge, it lines up perfectly with recent launches. The ONVO L90 officially launched in late July. Delivery started soon after. Boom, big August numbers for ONVO.
And the new ES8?
The all-new ES8, their flagship NIO SUV that was unveiled late August. Pre-orders open, deliveries start late September. So that'll contribute more going forward.
So the timing makes sense.
Exactly. And the CEO, William Lai, basically said as much. He linked the sales momentum directly to the strong market reception of the ONVO L90 and the new ES8. It suggests the product strategy is landing well with customers.
Okay, so the strategy seems to be working on the delivery front. Let's switch gears a bit to efficiency and margins. How are things looking on the path to, well, actually making money?
Right, the profitability question. So the overall gross margin in Q2 improved. It hit 10.0%.
Okay, 10%. How does that compare?
It's up from 9.7% a year ago, and notably up from 7.6% in the first quarter of this year. So positive trend.
What's driving that improvement?
Well, the company points to a better mix, specifically increased revenue from, interestingly, used cars and also their technical R&D services, so not just new car sales driving the gross margin up.
Okay. And the margin just on the vehicles themselves.
Vehicle margin was 10.3%. Now, that was down from 12.2% in Q2 last year.
Why the drop there?
They cite product mix changes again, though they say lower material costs helped offset some of that. But importantly, it was pretty stable compared to Q1's 10.2%, so holding steady sequentially.
Got it. And costs. Any good news there?
Yeah, actually, loss from operations on a non-GAAP basis was down significantly over 32% from Q1. That's a big improvement in operational efficiency quarter over quarter.
And the specific expense lines? R&D admin?
Both down compared to Q1. R&D expenses fell 5.5%. SG&A selling, general, and admin dropped about 9.9%.
What's the reason they give for those drops?
They mentioned things like different development stages for new tech, meaning maybe less intense spending in Q2, and also organizational optimization efforts.
Right, streamlining. So for you listening, we see margins ticking up, costs coming down sequentially. Even if 10% gross margin doesn't sound huge, how significant are these shifts for the long term, especially with new models launching? Can they keep this up?
It's definitely significant. Look, for a company still scaling rapidly in the EV space, improving gross margins consistently is a very positive sign. It shows they're gaining leverage, finding efficiencies, and the CFO, Stanley Yuqua, he basically said their cost reduction efforts are starting to work.
Okay.
And he made a pretty bold statement, actually. He said they're now approaching a structural inflection point in our financials.
A structural inflection point. What does that mean in plain English?
It suggests they believe they're turning a corner, moving towards a state where growth becomes more self-sustaining, where revenues potentially start consistently outpacing cost growth, leading towards profitability. It's a signal of confidence in their financial trajectory changing fundamentally.
That is a strong statement.
It is. No, we should add a quick note on the balance sheet. If you just look at the snapshot, you'll see current liabilities are higher than current assets, and shareholder equity is negative.
Which normally sounds alarming.
For an established company, yes. But for a high-growth EV maker like NIO, it often reflects the huge upfront investments they're making. R&D, factories, battery swap stations. These things cost a ton before they generate returns.
So context is key.
Absolutely. The company states they believe their financial resources are sufficient for the next year based on expected revenue growth and their ability to raise funds.
And didn't they just get a big investment?
They did. That additional RMB 20 billion put into NIO China, which increased NIO's own stake to almost 92%. That's a major capital injection, easing liquidity worries and showing commitment. It backs up their confidence.
That 20 billion is definitely a big vote of confidence. Okay, so let's look ahead. What are they telling us about Q3, the forward guidance?
They've set some pretty ambitious targets for the third quarter.
Starting with deliveries.
Yeah, they're projecting deliveries between 87,000 and 91,000 vehicles for Q3.
87 to 91,000. How does that compare?
That would represent year-over-year growth of about 41% to 47%, a very strong increase.
And didn't the CEO say something about that number?
He did. William Lai anticipates this range will set a new all-time record for quarterly deliveries for the company.
A new record.
Okay.
And revenue.
They're forecasting total revenues between roughly RMB 21.8 billion and RMB 22.9 billion. That's about US $3 billion to $3.2 billion.
Damn, a growth rate there.
That translates to an expected increase of about 17% to 22.5% compared to Q3 last year.
So strong growth projected on both fronts.
Yeah.
And the strategy behind hitting those numbers.
It really comes back to the new models. Emphasized again that the ONVO L90 and the all-new ES8 are positioned to, in his words, redefine competition in the large SUV space.
Redefine competition. Strong words.
Yeah, and he ties it to accelerating the shift to battery electric vehicles, BEVs, backed by their tech innovations and, crucially, their battery swapping network.
So for our listener, this strong guidance.
Yeah.
What does it really signal about how much impact they expect from ONVO and the new ES8? Are these targets, realistic? And how does this multi-brand thing actually redefine anything?
Well, the guidance is certainly assertive. It shows immense confidence internally that these new products, combined with their efficiency gains, will drive significant growth. When a CEO talks about redefining competition, it signals a belief that their offering isn't just another SUV, but something fundamentally different or better, whether it's the tech, the user experience, or the value proposition, particularly with things like battery swap included.
So it's about differentiation.
Exactly. The multi-brand strategy allows them to attack different parts of the market specifically. ONVO for the family haulers, NIO for the premium tech enthusiasts, FIREFLY for the stylish city dwellers. It broadens their reach. Hitting these Q3 targets would be strong validation that this strategy, powered by their unique ecosystem like battery swap and smart driving features, is resonating and allowing them to carve out a distinct competitive space in a very crowded market. It suggests the heavy investments might really be starting to yield substantial top-line results.
So wrapping this up, we've seen NIO navigate a complex quarter-beating loss estimates, slightly missing on revenue, but then hitting record monthly deliveries in August.
Yeah, and they're looking ahead with really ambitious Q3 targets, banking heavily on the success of their new ONVO L90 and the flagship all-new ES8.
It paints a picture of a company definitely in a pivotal growth phase, trying to balance rapid expansion across multiple brands with that crucial push towards better efficiency and that structural inflection point the CFO mentioned.
Absolutely. The next few quarters are critical. We'll see if they can truly convert this current momentum, this buzz around the new models, into sustainable profit growth. It's a major test in a tough market.
And for you, our listeners, something to chew on. We talk a lot about deliveries and margins, and NIO talks about redefining segments with its multi-brand approach and battery swapping. But looking beyond those metrics, what specific development, what future thing, maybe it's a tech breakthrough, a partnership, a milestone in their infrastructure rollout, what would be the real signal, the next big aha moment that tells you NIO is truly cementing itself as a long-term leader, not just a competitor, in the global smart EV race? What's that next definitive proof point you'll be watching for?